it is a mixed picture. Hang Seng is the underperformer today.
Another positive close, and we've been slowly inching up. Resistance line is 24,980.
The intent is to structure the debt in a fashion that we leverage it down to around 800 million odd levels from the current billion.
22 points lower on the Nifty, 94 lower, 9,800 points lower on the sensex.
Clearly, there has been a pivot from the government side to move into demand-side stimulation.
In our view, the AUM growth, we still will hold it at the 20 to 22% levels for the full year.
I think kick-starting from September, hopefully we would achieve the CAGR growth, so maybe just about 5%.
Across all other industries also, everybody is going to benefit. And the common man is going to be a big beneficiary.
After a 6-day rally, we are taking a bit of a pause today.
SEBI plans to have a transition ultimately towards having monthly expiry.
It's been a very quiet day today, quite choppy as well. So the Nifty up around 40 points is above the 25,000 mark.
Well, that is the day so far, and a lot's happening, lots to track, individual stories more than what's happening as far as the broader market is concerned. Just above 25,000 is where the Nifty is now holding. This is Closing Bell. We're coming to you live from the CNBC-TV18 Moti Rosewal studios. I'm Prashant Surbi, Rima with me here in the studios. Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, afternoon. 7th day of gains. The gains are not much to boast about, but at least we've conquered 25,000 today.
Absolutely. And I think this is the market right now, the phase that it's in. It's not about pomp and show. It's about taking the small steps and, climbing on top. Because so far for the week, and this day is not even close, we're already up 1%, and the gains are fairly broad-based as well. If you see most, across most parts of the market, including financials. Nigel.
Well, that's right. And we'll have the sensex contract expiry as well that will play out. So let's see if that can make some kind of an impact. But for the time being, you'll have to say it's been a rather good trading session.
Oh, absolutely. And, lots of individual movers, right? And I think it's all about, actually, this year broadly has been about individual movers. It depends on what you kind of own. It's not been about very large and broad moves in any sector, per se. But about 50-odd points, about 150-odd points on the Sensex, and a bunch of those sectors coming up on the screen as well. The auto index. We'll have an interesting conversation from the top boss at Tata Motors shortly. At this stage, Rima, what else is happening? I think we, of course, will go across to our story.
Indeed, BSE is down nearly 5% at the day's low. Angel One has seen a knock that's ground close to about 5%. And other than that, you've got profit booking visible in IT. The Nifty IT index had moved up 5.5% over the last 2 trading sessions. And sectorally, that's the only one which is a bit of a drag, and that's down close to about 0.7%. Let's tell you what we've lined up for you on Closing Bell. Action-packed, 1 hour coming up. The markets have managed to extend gains going into the final hour of trade. The Nifty is above 25,000, and it's the financials today leading from the front, while IT has seen some selling pressure. The other big story, sources tell CNBC-TV18 that SEBI is all set to float a consultation paper to consider ending weekly F&O contract. Shares of BSE, Angel down and out following this news flow. And Tega Industries is the other big news maker. The company has entered into a joint venture with Apollo Funds to acquire Molycorp for about 13,200 crore rupees. Shares take a hit despite an optimistic management commentary. We'll get you excerpts of our chat with the management in just a bit. And reports suggest a deal may be in the works for private equity firm GTCR to acquire Advent International-owned drug maker Zentiva. Shares of Aurobindo Pharma, that was previously leading the acquisition, are up and about in today's trading session, while shares of GAIL are also extending gains following the news that the outcome on the pipeline tariffs may come over the next few days. Brokerages estimate a tariff hike of anywhere between 10 to 20%.
Okay, all right. So those are all the stocks and themes on our radar. Let's quickly get started. We've got, I think, Mitesh with us now, so get some trading ideas going. Mitesh, tell us, index stocks, and also throw in a word on these capital market plays because of the story that we'll just come to. For instance, BSE is now down 5%, Nuvama is down 3%, Angel is down 5% as well. Again, rumblings around what regulatory changes are perhaps coming up ahead. So just a view on these stocks and, of course, overall trades for the last hour.
Yeah, so I think on the index, I've advocated that we head towards the upper end of the range. We're doing that. We've crossed or just around trading around this 25,000 mark, but the next logical target could be around 25,150 and then 25,250, 300 zone. I think that will be a very difficult level for the index to clear in one go. So maybe you should take some profits as you get closer to 24,150 and more as you get closer to about 24,250, 300. Now, on the capital market plays, I think, very clearly negative news flow, which means that the short-term sentiment has turned negative. But a couple of these names are also, have been in a declining mode. For example, if you look at the charts of Angel One, ever since making a high around 32, 80, 90 zones, the stock has continuously made lower highs and lower lows. And if you look at the long support areas over here, I think, they will kind of pitch in around these levels of 2060 to about 2080. There may be another 4, 5, 6% kind of a downside left over here. For BSE, similarly, I think the stock also, last time it bounced back from near the 200 average area. It made a low of around 2090, which was on the 29th of August, and 200 average area was around 2070, and currently it's the 200 average area is around 2090. So that is the first support. But in case BSE breaks 2090, then I think pencil in another 5 to 7% or 100 to 150 point kind of a correction happening on the downside. On the stock calls that I have a buy on Cyient. I think the IT names have turned very well, and that's where the focus is. So Cyient for me is a buy. Keep a stop just below levels of. Sorry, I think just allow me to load the chart. I think it's just taking a bit of time. Yeah, sorry. So Cyient is a buy with a stop at 12.10. And I would look at a target of around 12.75 here. And Hindustan Zinc, see, I think, this stock was slightly underperforming the rest of the metals pack, but today I think it's given a positive crossover. The candlestick pattern is very bullish, so buy here as well. Keep a stop at about 437. Look for targets in the range of about 456 to about 460.
Sorry, those are trades individually. Angel, did you have a view? You put out a view, right?
That's right, I did.
Okay, and of course I heard you on BSE. Yeah, Angel, by the way, is at an important juncture. 2350 or so was the low which was made in March of 2024. Then you had, then that was largely held with minor breaches on the downside, and you were back at those level once again. It's a downward sloping slight trend line, but you're there. So we'll see where this one goes as things progress from here on. On things like Motilal, etc., are we seeing? Okay, Motilal is absolutely flattish to slightly lower. I mean, I guess Moti is of course doing very well on the mutual fund side, etc. as well. It's got a much more diversified business, private equity, not just a pure broker like some of the others that we mentioned. Mitesh, thank you very much for joining us. Good speaking with you, and we'll come back to you for more. This is the exclusive that I think many of these stocks are reacting to. Sources tell CNBC-TV18 SEBI is set to float a consultation paper considering ending weekly expiry contracts. All consultation, all under consideration, nothing decided. I just want to make that clear upfront. Yash is with us with what he's picking up. Yash, over to you.
Well, it was actually on August 21st that market regulator SEBI chairperson Tuhin Kanta Pandey had expressed the intention of having longer-term derivatives. Now, taking that intention forward, according to our sources, SEBI is expected to release a consultation paper on removing weekly expiries, and this consultation paper could be released as soon as within the next 1 month itself. What we've also been given to understand from our sources is that the ultimate intention for market regulator SEBI is to move towards monthly expiries from the current weekly expiries, but with a defined glide path to move towards that intention of monthly expiries. Also, at this point of time, one thought which SEBI has on its desk is to have a single day expiry for all exchanges, be it NSE, BSE or any other small exchange, whether it is a fortnightly expiry or ultimately monthly expiry. What we've been given to understand from our sources is that exchanges, NSE and BSE, could be roped in to seek their comments on removal of weekly expiry, and that could happen as early as next week itself. Apart from that, market regulator SEBI is looking at various ways in which retail participation in the derivatives market could be restricted. This could be done through putting some kind of threshold onto it. Also, ways are being looked at in which cash market volumes can be enhanced, but sources maintain all these moves which SEBI is currently contemplating will only be undertaken through a proper and a deep consultation process.
Yeah, no, absolutely. Yash, thanks very much for that. Let's get in Rajesh Baheti now into the conversation. He's Managing Director, Cross Seas Capital Services. Rajesh, welcome back. It's an issue which we've discussed on and off, I think, since last year. I trust you heard Yash in his story. Once again, it'll be consultation, it'll be in a paper, and then there'll be back and forth, and it'll take a few months as we understand it. But the paper itself within the next 1 month is what Yash is saying. Your first thoughts, Rajesh?
So I just want to, take a little bit more time to analyze this. Now, if the weeklies per se were undesirable, then they wouldn't have been allowed in the first place. So what we are seeing here is that something has now become a victim of its own success. Having said that, I think there are many ways to milk a cow. What I feel, and what a lot of other brokerages feel, that the retail participation at the bottom of the pyramid, the problem that the government seems to face is that those guys lose money. And one of the solutions, I've personally gone to SEBI and advised them and told them that it is our postulation that the losses that the retail is facing is mostly on account of buying options rather than selling options, because selling options requires a whole deal of money in terms of margins that you need to keep. But you can buy options with as much as even 1,000 rupees or 2,000 rupees, depending upon the option price and the contract size. So we have suggested to them that if you kind of reduce this arbitrage by putting a capital adequacy norm, that you must have an X balance with the broker, with the exchange, before you're able to be allowed to trade options. It might remove that bottom of the rung population from participating in the options market. So in my opinion, that would be a better approach rather than restrict products, because each product has its own benefits and costs, and there are many events that are closer in terms of decision making, where the weeklies play a very important role in hedging your contracts rather than paying the higher premiums on the monthlies. And these products were allowed to be introduced. Obviously, they've just become a victim of their own success. They were not per se undesirable.
Rajesh, sorry, your in one line, your suggestion is what to the government that you've already made, right? To SEBI, I'm assuming.
I have personally gone to SEBI and made the suggestion that you create a capital adequacy, minimum capital adequacy of say 100,000 rupees. That even if you want to buy an option worth of say 5,000 rupees, you must have a clear minimum margin balance of 100,000 kept with the exchanges or with your broker, which is upstream to the exchange, before you're allowed to trade an F&O. So it kind of makes buying options more expensive compared to selling options, and it will restrain people who don't have that capital adequacy from being able to buy options for as cheap as 5,000 rupees or 10,000 rupees.
Rajesh, okay, that's a very interesting suggestion. You raise the bar. You bring in a threshold,
absolutely,
which makes it slightly more difficult for average retail investors to play in the options field.
Absolutely, at the lowest rung of the pyramid, and that's where I think the government is seeing the problem.
Yeah.
I don't think
By the way, Rajesh,
I lose money.
Yeah, Rajesh, Yash's story talks about this and that, which is the weekly options bit, which is under consideration, but also
uniform monthly
some kind of measures to disincentivize and make it harder
for retail to come into F&O.
Rajesh is saying, he's got both, which is
okay.
But again, once again, this is all under consideration, all consultation.
It's not final. Absolutely,
nothing is final. Just want to say it again and again.
Absolutely, that's an important caveat. So, Rajesh, that's one part of it. You've made a suggestion that could make it that much more difficult for regular retail to participate in F&O. But the other, part of it was whether the sheer volumes that were playing out, whether that itself would eventually lead to some sort of, I don't know, system instability, if at all. Just a sheer volume that was playing out on expiry day. And whether there was that angle to it as well, because what Yash is also picking up, that perhaps even the monthly product, there is some consideration right now that just do one monthly expiry across exchanges. It's not like NSE can choose one particular day of the month and BSE or some other exchange can choose another day. So is there that element to it as well? You know, just ensuring safe and stable working of the market mechanisms with such large volumes?
I personally don't think that the weekly options has led to any instability in the market. I think the markets, in fact, India still trades at a premium to the EM basket. Premiums might have come down. We've not seen any big moves as such that has happened because of the weekly. There was a problem with certain entities that might have been gaming the market. I think that's under investigation. So just because somebody has gamed the market, I mean, that you can do with any market, any expiry. So keeping that aside, I don't think it has caused any harm, apart from the fact that it's become a kind of a victim of its own success. I've repeated that before also. So per se, I don't think the product is harmful to the market. You have a certain problem with a certain strata of people that are coming in, which you want to avoid, and you want them to stop losing money that easily in the market. I think when you talk about this and that, bit has already been tried. The multiple weekly expiries are now down to a single benchmark, one contract per exchange, once a week. We've gone to that, and I think it's time to a little bit change on this side on entry barriers, and then take the data again. And nothing needs to be done all at once. So you take the data. If you've achieved what you wanted to achieve, there's no need to tinker with the structure of the market.
Rajesh, we'll leave it there. Thank you very much. A good perspective on the entire matter. We'll wait for the consultation paper now in terms of what is likely to happen. Thanks very much. I think we're going to take a quick commercial break now, right? I mean, we're about 40, 45 points higher. 25,015 is where we are at. And, you know, things are sort of, settling slightly higher, but there's no huge excitement one way or the other. Individual stocks, another thing altogether. We take a break. We're back with Dinshaw Irani. He's our alpha manager of the day. Coming back with him.
Welcome back. The mid-cap index is flat, but individual stocks, Sigachi 18% up, Jain Irrigation 10%, Green Panel 17.5%, very large volumes. Morpen Laboratories has gotten back into the green. Indoco Remedies 13%, SMS Pharmaceutical up 15%. These are stocks where you are seeing some movement live in the last few minutes. But the other one in the pharma pack, which deserves attention, is Aurobindo Pharma. It looks like the Zentiva acquisition is off the cards for the company. Vinny joins in with the details and why the street likes this.
Hi, Reema. Yes, so seems like, that's something the street is cheering as of now. So what we heard from Bloomberg, this is according to Bloomberg reports, that GTCR is nearing a deal to buy Zentiva. GTCR was one of those players who had, who was also in the bidding for Zentiva, GTCR, TPG, as well as Aurobindo. And previously we knew that Aurobindo was likely, amongst the highest bidders coming in for Zentiva, but seems like those stocks didn't work out, and now according to this report, GTCR has emerged as the likely buyer for this. Now, when we had heard that, Aurobindo was actually looking to buy that, and the stock has seen a fall coming in. Why? Because investors were concerned about how this would impact their balance sheet. It was a big acquisition. So in terms of the concern, in terms of debt would come in as well. So that was a big fear for the street. And when we spoke to the management, they said that yes, they were in talks with Zentiva, and they were still in early talks the last time we spoke to that. But seems like that didn't work out, and the management said that they would always, watch out for investors' concerns and would not overpay for any acquisition. So it seems like the deal is off, and that is why the street is cheering it.
Absolutely. Winnie, Thank you very much for that. Hormuz is now here with spotlight on the top movers in the market. Hormuz, take it away.
Yeah, a couple of those names found their way to Rima's list as well just a few minutes earlier. We'll start off with Swelect Energy Systems, and this is also the biggest single-day gain that the stock has seen since September of 2024, as well as the highest volumes since that period that it has seen in a single trading session. Of course, it's gaining after a two-day fall, and today's volumes of 11 lakh shares is well above the 20-day average for the stock, which stands at just 85,000 shares for a Swelect Energy Systems, a 20% upper circuit for the stock. But despite this, the stock is still down 15% on a year-to-date basis, and this comes after a 91% surge that the stock had seen in 2024. Green panel on the list as well today, the fourth straight day of gains for the stock. This is the biggest single-day gain that the stock has seen since November of 2019, and on volumes that are the highest in a single trading session on record. And we have had almost 1.5 crore shares that have changed hands today, and the 20-day average is only 65,000 shares. In comparison to that, we've had 1.5 crore. As a result of this move, the stock has also moved above its 50 and 200-day moving average. Again, despite this move, the stock is down almost 20% so far this year, and it was down last year as well with a 12% decline. I'm trying to point out GMDC, not because it is a big mover today, but the fact that it cooled off substantially from the highs of the day. At one point, the stock was down almost 13% from the day's high when it fell almost 6%, then saw a bit of a recovery from the intraday highs. And because of this move today, the stock has given up all the gains that it saw as of last Friday and on Monday. Last Friday, the stock was up 11%, Monday was up another 5.5%, and today's volumes are the second highest on record for the stock. We had almost 4.5 crore shares of GMDC change hands today. 20-day average is just 55 lakh shares, and today's turnover so far, which is 2,200 crore rupees, is 15% of the company's overall market cap. And Tega Industries, a stock that has been in the news for the wrong reasons in the recent past, that stock is up 20% as well. It's the biggest single-day gain since January of last year, and this is the highest volumes that the stock has seen on record. Take a look at the volumes here. 7 crore shares have changed hands on Tega compared to a 20-day average of just 26 lakh shares, and it is trading above its 50-day moving average of 36, and the next important level on the upside comes up to around 42.5, and the stock from its IPO price has more than doubled. The issue was also subscribed well over 100 times, so plenty of double-digit gainers today in the broader markets, was a lot of them seeing record volumes in today's session.
Thank you very much for that. The other big story today is Tega Industries. Now, the company announced a big acquisition of Molycop, which they will acquire as a part of a joint venture with Apollo Funds. But the stock today is lower because the market cap of Tega Industries is equal to the market cap of the acquired company. So is it too big for the company? That's the question investors are asking. But the management sounded very optimistic. Listen in to what he had to tell CNBC-TV18 in an exclusive conversation earlier today.
Debt at the target level is roughly about $1 billion. And the attempt is to bring the leverage down after the transaction closes. Sure, I think through the consortium arrangement that we have with Apollo, the intent is to structure the debt in a fashion that we leverage it down to around 800 million odd levels from the current billion. And that should help us deliver some improved benefits in terms of interest cost reduction with the leverage coming off, and hopefully even an improvement in the credit rating. We should be able to, the attempt is still early days, but the attempt is to at least shave off anywhere between 25 to 40 basis points of their current terms with their current lenders. I think where Molycop today operates at is roughly around 11% EBITDA levels. Our aim would be to try and improve that over the next 2 to 3 years to, on an average, anywhere between 13 to 14% levels. Tega, as you know, operates at a CAGR of 15%, delivers about close to 22% EBITDA. So the margin profiles are different, but we hope that on a consol basis over a 3 to 4 year period, we would be roughly at about 18% on a consol basis. In our model, we've taken like a revenue growth at a very conservative level for the target. We've maintained it at about 3.5% to 4%. They're currently doing about that much. So without putting in too much of high growth pressure on the target upfront, we've kind of modeled it on a conservative basis to be around 3.5% to 4%. With Tega consistently delivering at about 15%, we're looking at leverage to come off by year 4 to about closer to 2 times of EBITDA, 2.5x EBITDA over 5 years. And we should be at an EBITDA level of close to about anywhere between 17 to 18% from third year onwards on a combined basis.
Dinshaw Irani is now joining us, CEO, Helios Mutual Fund. Dinshaw, great to have you with us here. Thanks very much. My question is about Tega. I trust you heard the conversation, you've seen the deal, the big acquisition, etc. You've been in the market a long time, and Indian companies are now starting to do these leveraged buyouts. Still rare, but this one is one of them, in a large size. I mean, any thoughts, Dinshaw? It's not a Tega-specific question or what industry they're in, etc., but the way it's structured. Yeah.
Yeah, but thank you for having me on board, Prashant, and very good afternoon to you and your viewers. Yeah, that's one thing that I think we've not seen in a while, these LBO kind of deals, which I think is a very big positive because that makes the market very vibrant and opens it up. In fact, today only we had a meeting with the Israeli regulators that come across, and they were trying to wonder why nobody's investing in Israel and stuff like that. But anyway, the fact is that India is becoming a very attractive destination even for raising capital as such. So I think that's something that has to be looked forward to. In fact, as I told them, that look, $4-5 billion of flows every month happening in mutual funds is not a small deal at all, which was unheard of earlier. So obviously we are becoming very attractive in that way as such. So, but I'll leave it here. I won't even comment on Tega, by the way.
Hi, Dinshaw. Good to see you in. What about you all got everyone's fancy when you all, focus on the EV space and the EV theme out there? A couple of them, I think, proper disclosures have already been made. Ola Electric has got a long way to go from here as well.
Actually, Nigel, not only Ola, we also picked up Ather at the time of the IPO itself. We were anchors there. And I remember you guys asking us questions on that, or rather me specifically, on why we picked up Ather. So I think we are very convinced on that space. That is, going forward, that is the space that you want to look for, at least in the two-wheeler. And we are very convinced that even Ola, earlier we didn't pick it up. Actually, we picked it up sometime in August itself after the quarterly numbers came out. And our conviction went higher when the management came and reiterated that they will be improving their margins going forward, and how the contribution is going to improve, and how the new product is going to be a very the generation 3 that is going to be a far better version of Gen 2 and Gen 1, obviously. So it was obvious. And by the way, after we picked up, the stock remained there for a while. But I think after the 15th of August, when they came up with the Gen 3 demo in Delhi, and obviously the new battery launch, I think that's when the stock really reacted upwards. And we were convinced that this is going to be the way forward. And obviously, there's much more to go in this than what we've seen before.
So that is on EVs. Dinshaw, hi. Good to have you in. So consumer. We've discussed financials. We know you love financials. But this whole market seems to be, taking a big punt on consumer. Now, I don't know if that's what it is. If it's a passing fad punt, or if it is something that can make you lasting money. I mean, if it's worth pivoting a little bit in the portfolio towards other names, I mean, other auto companies, it could be other platform companies. You tell us, or how are you thinking about it?
So, Survi, actually, we're fairly convinced. I mean, as in the sense that with the changes in the GST. In fact, by the way, my analyst team today is in various parts of UP trying to gauge the festive demand itself. And whatever they've been calling in with, they're very convinced that it seems the retail is all geared the way they're stocking up. They're geared for a bumper festive season. And obviously coming on the back of these price cuts because of the GST cuts, I think that's going to be a really fun rather festive season for most of the retailers. So we were very convinced earlier only when the announcement happened on 15th of August, we realized that this is where you want to be. And that's why we didn't go and bulk up on what we were, rather buy new names. But we already were in these consumer discretionary, if you will, names, very different kind of names like tourism and stuff like that. And obviously healthcare, which we would classify as consumer discretionary because that's how it is. It should be. I mean, hospitals I'm talking about should be classified as. So those are the kind of names that we are in. Obviously, the platform companies have done well, and they will continue to do well on the back of this, because once you have savings left, this is where you're going to spend it on also. And as I tell everybody that if a foreign investor comes to India, he will be the last guy who will go and buy a cement company or a steel company, because he's got to go back and tell his investors that I went to India and I bought these differentiated plays rather than the same run-of-the-mill which you can get in your own country. So I think that is where the real fun is going to happen. So.
Yeah, no, absolutely. Any thoughts on another name, Dinshaw? Piccadilly. It's in a space which you track, alcoholic beverages. There's a allotment which has happened to some high net worth individuals. I'm sure you've picked up on the news.
Prashant used the word track very carefully. I was wondering which adjective you'll use. A space you like, a space you consume. But he's gone with track. He's playing it safe. So Piccadilly.
Yeah, but no, we not. So basically, the fact is that there are only a handful of names in this particular segment. We hold one of them, but that's only in one of our funds, which is in the mid-cap fund, where the small-cap play on alcoholic beverages is there. But otherwise, we're not that clued on to this sector, as Prashant put it. But yeah, as a consumer, I'm a fairly good consumer of that. So I'll leave it here.
It's like a confessional. Yeah, but you know, it's a what, 6,500 crore market cap company. I mean, perhaps in the listed space, perhaps the smallest, right, in the branded space. Just looking at the price, it had gone up to almost $1,000. Not 1,000 actually. The high was about almost 985 was the high. And it's come off a little bit, but 720 now after this 14% kind of a move that we have. Anything else on your radar? What's the new Ola or Ather?
If there was, you'll see it in my end of the month portfolio, Prashant. I won't be telling you anything upfront.
But you're anchor investors in Urban Company, right? You all participated.
Yes.
So tell us the rationale behind this investment.
So it's the same, Rima. I mean, if you see the kind of platform that he's offering, actually it's a platform company, right? I mean, you get varied services across. You don't need to spend capital on introducing new business lines. You just need to have that service in place and people will buy. In fact, nowadays they've started the Insta-made services and all, which is phenomenal because my wife also uses it regularly. Actually, the 15 minutes the maid comes to your house for a couple of hours and stuff like that. That's phenomenal service. So there are lots of options available here, and I think it's got a long way to go as such in terms of the potential market that it has as its discretion. And in fact, globally also, if you see these kind of service platforms, are fairly handful of them. So it's a very unique platform which India has to offer, and probably a monopoly in its space right now as of now. I mean, quite a big, huge player in the place right now. So.
You know, and Dinshaw, this also is, telling us how the whole platform ecosystem is coming of age in the listed market, the public market universe, right? Because from Eternal, now you have Swiggy, and then you have PB Fintech, and there's obviously Paytm, and now there is Urban Company. So it's becoming a class in its own self. Maybe we'll have a fund on this also very soon. But within these new age consumer tech platform companies, which are the ones where sort of you have maximum ownership or maximum conviction? Because they come from different sectors.
Right. So basically, Surabhi, the fact that we look at platform companies very differently. I mean, what we try to see is whether that company offers convenience? Is that convenience cashable? I mean, can you cash that convenience? And is it a mass convenience? If all three segments are yes, I mean, answers are yes to this three questions. The fourth one, which is the most important, is it easily replicable? If it is a yes, then obviously that company is not what you're looking for. So it's obvious that we pick up these players, and that's why you'll see only niche plays in our portfolio as such. We got most of the platform companies, some we don't own. We got a PB Fintech, we have a Paytm, we got Urban Now, we got an Indigene, which is a pharma-based platform play. We got CarTrade, which again is a very differentiated model in the space of monopoly, actually now literally in that space, though it's been suffering for a while, but for a couple of days. But I think that's one of the downturns that you see in life. So we've seen all these, and that's why we're very particular in what we pick. Obviously, I'll leave it here, and that's why we like that's how we analyze our platform companies.
Okay, all right, got it. Interesting. Thanks very much, and thanks for the candor. Really, really helpful. I must compliment, it's very helpful when, mutual fund managers can go out and at least talk about why they like what they like and where the conviction is coming in from, rather than, more general conversation. So this is very, very helpful. Thank you so much. Thank you for joining in. Well, on that note, we do have to take a very quick break, come back on the other side, and we'll get you a check on all the dealing room chatter coming up, and of course, final trading ideas with Mitesh as well.
Well, markets are unable to get really past the 25,050 odd hump. So we've come off a little bit from the top, and the mid-cap index has moved into the red. But Nimesh is with us to tell us what is he picking up. Nimesh, what are you picking up in terms of flows and the markets?
Well, Nigel, it looks like it's a day of consolidation, extremely range-bound day of trade. Again, as you rightly pointed out, a big resistance on that 25,000 odd level. So that's playing out for the last many days. But from a flow perspective, it's very, very muted is what I understand. But the number may look large because of the very large blocks. As we speak, there was a very large block on GMR airports as well. Nearly 6 crore shares have got changed, and I'll talk about that later. But that's the reason why you might see a big number from an institutional point of view. For the second day running, there seems to be some buying interest back in the PSU name. So the PSU index has gained another 1% today. And that was part of my feedback yesterday as well, that if there is some bit of buying, that's in the PSU basket. And that's showing up in today's market as well. On the other side, because of the story that we put out, capital market stocks are under pressure today. BS is down 5%, so is Angel. And generally, there is a fear now that once that weekly expiry goes out, you might see a bit of hit on the earnings as well. So that's playing out as far as the financial stocks are concerned. Broadly, as I said, diff consolidation, not much to speak about. But just to reiterate, the institutional data may again look big because of some large blocks.
All right, got that, Nimesh. What about individual stocks? What are you picking up?
So I'll start with the blocks then. The first is Adani Power. There was a large block in the morning trade, nearly 1% equity got changed hands. And that stocks did see a bit of a recovery as well. I understand when one of the leading long-only FI was a seller and a single buyer, a domestic mutual fund was a buyer in the Adani Power block deal. So that's the first name. Similarly, there was a large block in Ambuja Cements as well. Again, the stock has recovered from the lows. There was a large block in Ambuja Cements as well. In Ambuja Cement, I understand, again, the FI could be the potential seller there. But unlike in Adani Power, where there was a single buyer here, a clutch of family offices, some domestic mutual funds, and some HNIs were buyers in the Ambuja block. So that's a color as far as Ambuja block deal is concerned. A couple of names where is delivery-based buying happening in the last couple of days. Britannia stands out, as well as Mastech stands out in terms of delivery buying from larger institutions. For Britannia particularly, I understand one of the leading domestic mutual fund has been aggressively buying as a part of the consumption theme. So that's playing out in Britannia. And as I said, there was a very large block in GMR airports as well. 6 crore shares have got changed hands. So if they can show the stock price movement, again looks like one of the very leading long-only FI could be the potential seller there. Still don't have the details on the buyers, but just to mark that there was a very large block in GMR Powers in the last 10 minutes of trade.
Interesting names there. And by the way, Nimesh, I don't know if I'm reading too much, but on the seller, on the selling side, should we draw a straight line between GMR and Adani in terms of common seller? Possible? Because there are common shareholders.
Possible. That's what I'm saying. It looks like the same long-only fund has sold into GMR airports as well. But it's just got done in the last 10 minutes. I haven't got a chance to really confirm from multiple sources whether that was indeed the seller or not. But that entity owns a very large stake in GMR airports as well. So maybe That's you can draw a parallel, but again, if there is a disclosure, it will come that that particular entity was a seller. But I know for sure, as far as buyers in Adani Power and Ambuja is concerned, as I said, for Adani Power, a single buyer, a leading domestic mutual fund, and for Ambuja, it's a mix of HNIs, family offices, as well as domestic mutual funds who bought today.
Real-time feedback, Nimesh. I got sent a name which I don't want to mention, so people are listening, hearing you carefully. Okay. But in terms of the counterparty, the buyer, that is, the single buyer.
Anyway, as far as Adani Power is concerned,
we'll get to know the details.
I'll try to get a color on GMR Airports as well.
Yeah, we'll get to know the details. I mean, I think it should come up later in the evening. All right, well, let's talk about BTST trades. Mitesh is with us with exactly that. What to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
I think Mazima dropped. Sudarshan had also mentioned the stock earlier in the day. It's picking up strength as we end the session. So BTST here with the stop at 27.78 for targets of 28.15 or thereabouts. And NHPC is the other one. Really, I think the candlestick is a breakout kind of a candlestick. So we'll take a BTST here. Keep a stop below 81.70 and for targets of around 83 to about 83.5.
Got that. Let's talk about GAIL. That's also higher in trade. I think it's buzzing. This is, after there is a likelihood of a tariff revision higher. Sudarshan joins in to tell us more.
So the tariff hike pipeline tariff hike for the GAIL is imminent, and as per sources, we understand that the decision by PNGRB might happen very soon, and it's been on the fast track. So we have been reporting for the last few months that tariff hike can come, and the increase can be of up to 20%, and from the current tariff of around rupees 58 per MMBTU, it can be increased to rupees 70 per MMBTU. So might be on the basis of that news, the stock has been buzzing. Now, recently, like a few brokerages also have written on this. So first one was Investec. It's saying that it's hoping for a 20% increase, but in its estimates, it has factored in 10% increase. Jefferies believe that if there is a 10% increase, it will boost transmission EBITDA of FY27 by 13%. And if there is an increase of 20%, then transmission EBITDA can increase by 26%. And fair value for 10% increase is rupees 235. And fair value, if it is increased by 20%, then it increases to rupees 250 per share. And today, Nomura has come out with a note. It's saying that tariff hike might give a one-time boost. And as per our reports, we also understand that tariff hike can come and can be of rupees 70. Even Nomura is saying that it can be of rupees 70 per MMBTU and might be effective from April of 2026. And this integrated tariff hike of 20% can boost transmission EBITDA by almost as much as 42%. That is, Nomura believes that.
Okay, thanks very much, Sud, for that. That's a fair bit of data coming through on names like GAIL. What's the latest trends from the F&O space? Let's go across to Nigel, who's tracking that data closely. Nigel, over to you.
Well, both the opening batsmen, that is the Nifty Bank as well as the IT index, they are facing some kind of resistance at higher levels. So the tech index, it saw some kind of resistance at around the 50 as well as the 100 DMA. That chart will come up for you, and from there it's pulled back a little bit. And on the Nifty Bank as well, it's hovering around the 20 DMA. This is a very, very crucial mark. You'll want the Nifty Bank to go ahead and conquer this 20 DMA. If it can do that, that will be the fresh breakout signal actually. For the time being, it's hovering around those levels. On the options data, just take a look at it. The 25,000 put, that's clearly seeing writing. The premium has crashed out there, and you always want the nearest possible strike to see a good amount of open interest build up. From a bullish perspective, that's happened. But just take a look at the 25,000 call. The premium hasn't moved up out there. The premium is roughly around 115 rupees, 120 rupees odd. So you've got the direction right, but yet, in fact, the premium hasn't moved up. That's telling you there is some writing at that particular level. So at around the 25,100 odd mark, there is going to be a crucial resistance that's going to be coming in at that level, going by those call writers at around 25,000 call. Moving the stocks that we're looking at, Ambuja Cements. The street is sniffing that large trade all through the morning. That's happened at around midday. It'll be interesting to see what happens, post-market hours in terms of the names that come out and how will the street react to that. So that's seeing fresh shots into the system. However, there is some long addition we're seeing on NBCC because the big open interest build up out there. The stock as well has moved up. And you have a bit of a short covering bounce that's happening on NHPC in today's trading session. So keep an eye on that name. Last time I checked, stock up close to 3%, open interest down more than 5%. And the possible stock that comes into the F&O band, an unlikely name, Oracle, that's the one that's seen a big open interest built up yesterday. Today, from the day's high, it's come off close to around 6 to around 8%. And the last I checked, the open interest as a percentage of MWPL, that had moved to more than 100%, which means that it effectively comes into the F&O ban unless something drastic changes in the next 15 minutes. So that's the name to look forward to later this evening. Back to you.
Thank you. Mayuresh Joshi is now joining in to take us through the last leg on the show. Mayuresh, first, share your thoughts on Tega Industries and this big, bold acquisition that they've done.
Afternoon, Rima. No, I think the acquisition is huge, and again, I think compared to the market cap of Tega at the current juncture, I think it's a huge pill to swallow in terms of the market size or the market cap itself. However, I think the permutation combinations in terms of how the business dynamics and the synergies will work around over the next few quarters and the next few years is something to be seen. Obviously, I think the management has alluded to the fact that the business is with lower margins. And therefore, I think Tega's own operating margins between 2022 and the acquired business at 12.5 might mean that the management is probably a little bit more practical in terms of a 16 or a 17% margin, assuming that the 11% moves to 13% with some operational efficiencies kicking in. From a business perspective, I think it makes absolute sense because they are into the grinding media part of the business, while Tega's core business in terms of mill liners will mean a composite and a holistic solution to the end users. And therefore, I think from a business perspective, I think it should rather garner sufficient amount of volumes across geographies. And the valuation acquisition is also pretty decent. However, I think just the sheer size and the kind of debt that they will be picking up onto their books makes me believe that you should probably watch out for the next 2 quarters in terms of how operational synergies are building in onto the balance sheets, obviously with approvals coming through. And then do the revenue synergies also start kicking in. So I think a wait and watch for us as far as Tega is concerned.
Yeah, no, absolutely. I think what we're going to do is we'll take a quick break, right? We can do that. And we'll just come back. There's 12 minutes still to go for market closing. And we'll sort of throw some more stocks Mayuresh's way for perspective. Stay tuned.
Welcome back. Well, the management of Cholamandalam Finance, well, they spoke to us earlier today. They scaled back their guidance a little bit. They also gave us some color in terms of the way ahead. Let's listen in to what they had to tell us.
Question. Overall, in our view, the AUM growth, we still will hold it at the 20 to 22% levels for the full year. We will be reaching this, and there should be benefit with the number of units being sold because of the reduction in GST. And while that would have a slightly lower impact on the value, so overall we don't want to change it either positively or negatively because of the GST reduction coming into play. GST implication would, also mean lower EMI burden to the customer, which would mean it will improve credit. Just wanted to add that part to it. It has always been a case that this Q2 will always be a slow quarter because of rains and also because it has got a fair share of the period coming under inauspicious months, etc. For the full year, the overall credit cost would be in the range of around 1.5 or even 1.6% as somewhere equivalent to last year levels. And if, God forbid, the monsoon gets extended into Q3 like it happened last year, then it can even be slightly higher.
Okay, all right. Let's get in Mayuresh Joshi's view. Hi, Mayuresh. Good to see you in this afternoon. What's your view on Chola?
Hey, afternoon, Nigel. No, again, I think the management was pretty clear post last quarter's numbers that the asset quality pressures, where asset quality had clearly deteriorated, gross stage 3, net stage 3 assets quarter on quarter for the last quarter had come to 3.15, 3.2, if I'm not mistaken, 1.8 on the net stage 3. While the PCR also deteriorated quarter on quarter, close to around 44%, which makes us believe that the kind of deterioration that you probably saw translating into asset quality issues. Will that come back probably in a better fashion as we head into the second half? All of us know that second quarter might be a little bit soft. And because of that, I think the kind of guidance that the management has also given for credit costs to be at 1.5% compared to 1.4% in FY25, I think that is one monitorable as well. So again, I think the management's ability to deliver healthy AUM growth, asset quality pressures coming off, obviously diversification in their product mix, and expectations that if they're able to do this in terms of 18 to 20% AUM growth, which might mean that the profitable growth might be around 25%, leading to ROAs of 2.5, ROEs of 18%, where they're just at price to book on an FY27 basis will then land at 3.5 times. It will all depend in terms of numbers delivery. So our own sense is that we'll wait out for Q2 numbers and then expect that Q3, Q4 with GST rationalization and expectation of vehicle demand, consumer demand coming back might lead to better credit growth and reduction in asset quality issues.
By the way, speaking of GST, check out Lee Travenue's Tech, Ixigo, one of the stocks that has been steadily rising as a beneficiary, seen as a beneficiary, obviously, of the higher spends on travel. They, of course, run Ixigo 6%, 7% today. In this week itself, it's up about 10%. And in this month, it's up almost 20%. So it's been a good going for the stock. Mayuresh, any interest? Ixigo, the other one is RateGain. Anything else you like in this travel and tourism space?
I think we continue liking hotels. Afternoon to you, Surbi. I think our own sense is that hotels as a group should continue doing well. And with the rationalization that has happened up till 7,500 odd rupees, I think that will give an impetus to the organized players compared to the unorganized players, where there was definitely an arbitrage because of the higher taxes that were getting played out. Obviously, I think the expectation in terms of end user demand expected to go significantly higher. And the strategy that a lot of these hotel players have probably adopted in terms of an asset-light model, going for managed properties and being very, very selective in terms of their brownfield stroke greenfield expansion, means that leverage has not built up on their balance sheets quite significantly. And that is a boost in terms of both the margin performance as well as bottom line growth. Therefore, I think we continue liking stocks like an ITC Hotels, which we continue holding in our local and global portfolios. Even Lemon Tree as an example, which has a good mix of managed and owned properties, where expansion plans of almost 7,500 odd rooms over the next 2 to 3 years. In that mix itself, both in managed as well as owned, might mean to better EBITDA performance going forward. And that mix across their property offerings, right from entry, right to the premium side of their business, might mean that they have got a good product mix as far as their business verticals are concerned. So yeah, I think we've been very, very optimistic on the hotel space. ITC and Lemon Tree is something that we continue preferring.
Mayuresh, amongst the platform plays, which ones do you own?
Rima, honestly, none so far.
None.
But the hope here is that they might continue doing well. And I think that seems to be a base case scenario, whether it's Eternal or Swiggy. The expectation largely with festive season coming around and the hope in terms of the delivery volumes picking up quite significantly, both in terms of the quick commerce part of their business as well as the food delivery business, might mean better numbers and better volume growth as far as Q3 is concerned. Again, I think the accelerated investments that both these companies are doing in terms of their dark store openings should largely conclude over the next couple of quarters, which mean that the accelerated capex should largely be behind as we head into the next financial year. Valuations is the only thing which is of a concern to us, and therefore I think these stocks might continue doing well. But from a portfolio positioning perspective, I think we have no holdings specifically in any platform.
Okay, all right, Mayuresh, thank you very much for joining in and giving us all the advice this afternoon. It's a quiet session, but it's a session that is more about individual stocks than the index per se. The index itself has put on about 30 points, not too much. Even the mid-cap index is quite flat today, so you really have to go beneath the surface to find your winners. Anyway, on the large-cap screen, Adani Enterprises has had a good session, almost 3% up on Adani Enterprises today. Shriram Finance up to 2.5%, Axis Bank, SBI, Bajaj Finance. These are some of the other names on the financial side that have had a positive session. A couple of PSUs today on the upside, NTPC, Power Grid, ONGC. All these names have managed about a 1 to 1.5% sort of a gain. There's also State Bank of India, 0.7% higher. IT is a mixed bag. TCS managed a 0.5% gain. On the other side, Infosys has cooled off. Infosys is down 1 to 1.5%, which also brings me to the losers list. Bajaj Auto, Eicher Motor, Hero Motor. So some of the auto names continue to cool down. Count Tata Motors in that list as well on the downside. And then names like Titan, Lever, Trent. Some of the consumer names also seeing some profit taking. So that's the picture on the large caps, but a lot of mid cap high flyers, Rima.
Indeed. So on the way down, let me start with BSC and Angel One. These two stocks took a knock on the back of the SEBI consultation paper on ending weekly expiries. It's a consultation paper that we picked up from sources that SEBI is thinking about it, but stocks took a bit of a nosedive. And the other set of losers include that in the mid-cap IT space. Profit booking visible in Hexaware, Birlasoft, Tata Elxsi, Mphasis, Mastech. Stocks down anywhere between 1 to 2%. Salasar Tech, Adani Power, and on the way up, Green Panel, Sigachi, JN Irrigation, double-digit up move on some of these names. SMS Pharmaceutical, Vari Energy, JSWAL, Nico also stand out for the kind of price and volume action. The bell's gone. The Nifty's managed to cling on to 25,000, Prashant.
I think we're going to wrap up on this edition. A closing bell from all of us here. Goodbye. Thank you for staying with us. Mayuresh and our next set of anchors will take you through markets forward in just a bit.